The global struggle to meet renewable energy goals. Is this a shift back to oil and gas, Michael? This is also how will this impact net zero? This story I had fun writing on the Energy Newsbeat Substack. It is about three main points: the total failure of wind and solar and hydrogen to be sustainable. And what I mean by that is by the simple fact that they need subsidies to survive. Number two, the lack of funding going into oil and gas exploration has now changed. And after reviewing big oil companies and forward statements, after reviewing their Q2 earnings, we are seeing a change in the second half of 2025. Also, in the third part of this article, economies based on net zero energy policies are failing at a dramatically steep incline. First part of this story, Michael, was Orsted's financial woes. Holy cow, Batman. They lost almost $8.7 billion, what they need to shore up their finances, and their stock absolutely went south for the winter. In the U.S., delays and increased expenses like Sunrise Wind led to a $1.7 billion impairment, was one of their excuses. But yet, here's the biggest problem with Orsted. They have never designed their projects to be designed without subsidies. They've always relied on that. Now, on the day after that Orsted, Michael, TPI Composites has voluntarily filed for Chapter 11 bankruptcy in the U.S., and they're the number one blade manufacturer. Oops. Now, let's take a look at the counter side of this, where this argument is coming from. BP stood up in their earnings call this past week. The represents a $5 billion cut in green energy budgets from BP, but they're talking about the slashed planned investment into renewables between 1.5 billion and 2 billion, down from previous forecasts. Then you take a look at next decade. Next decade got $1.8 billion injection for LNG project, Michael. This is huge because guess who's investing in it? You've got Total Energy, ADNOC, and a few others investing into next decade. And I have reached out to next decade to interview their CEO. Now, here's where I took this story. I took a comparison of oil and gas investment of their Q2 earnings versus Q2 earnings for renewables. And you take a look at how much money was given back to investors in oil and gas versus what was given back into the renewables. And Michael, it was like nothing in renewables. So why would you want to invest in renewables? There is no money in renewables. Here's the bottom line. Net zero will be redefined in the next 6 months into the next money grab because it is no longer working, and they're recalibrating it right now.
I think it's really fascinating that, people always ask, well, where are all these companies going? Where is it headed? It's all in their earnings report. Now, what they do is they just throw it on page 20 of a 25-page report. So it's really now only with like tools like AI, which can summarize things and pull things out, that we're actually able to dig in and find all this stuff. And I think it's really interesting. I mean, I find it hilarious that private equity is losing their shorts on all these renewable investments. Now, losing their shorts, or are they in it for the tax deductions? Because again, there were great credits available for renewables, and there still are if you get the project spudded. That's an oil and gas term. If you get it staked, if you move a little bit of dirt by what, end of 2026?
Some by 2027. I have to go check the numbers, but it's still bad because the profitability won't be there for return. So why put any money into it?
I mean, we'll talk a little bit about this in my segment, but the oil and gas had pretty robust Q2 earnings relative to what's happening on the renewable side. So I don't think it's any shock that we're seeing this.
Oh, no.